How will OPEC Plus affect the oil market in 2025? In recent news, the oil market is buzzing with questions about how the Organization of the Petroleum Exporting Countries and its allies will shape prices in 2025. As oil prices fluctuate, many are eager to understand the implications of OPEC Plus decisions on their investments. Just this week, OPEC Plus announced plans to increase production, which has many analysts speculating about future price movements. OPEC Plus is expected to have a significant impact on the oil market in 2025 through its production decisions. In June 2025, the group decided to increase production by 411,000 barrels per day. This decision is part of a strategy to gradually unwind 2 million to 100,000 barrels per day of voluntary cuts made in December 2024. The approach aims to respond to changing market conditions while avoiding sudden price shocks. However, OPEC Plus faces several challenges that may influence its effectiveness. Geopolitical tensions, such as Israeli airstrikes on Iranian facilities in mid-2025, contribute to price volatility. Ongoing conflicts involving Russia and countries in the Middle East add to the supply risk. These events keep a geopolitical premium on oil prices, supporting Brent crude prices in the higher $60 range per barrel. Demand growth for oil in 2025 is projected to be moderate, estimated between 700,000 and 800,000 barrels per day. However, economic slowdowns and seasonal factors may weaken demand later in the year. This could lead to oversupply if OPEC Plus continues to increase production. Some members, particularly Iraq and Russia, have not complied with production quotas, leading to overproduction. This situation puts downward pressure on prices and increases the risk of a supply glut. Investors in commodities should prepare for a period of price fluctuations between $60 and $75 per barrel. Upcoming OPEC Plus meetings will be critical in determining the future of oil prices. The next meeting is scheduled for early August 2025. Decisions to increase production or pause the unwinding of cuts could significantly influence price direction. If compliance improves and supply tightens, prices may stabilize or rise. Conversely, if compliance issues persist, prices could drop below $60 per barrel, impacting the fiscal health of smaller oil-producing nations. OPEC Plus in 2025 is managing a delicate balance between increasing supply and maintaining price stability amid geopolitical risks and compliance challenges. Investors should keep a close on OPEC Plus production policies, geopolitical developments, and demand trends to gauge the trajectory of the oil market throughout the year.